Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Overnight, the Australian dollar bulls are now licking their wounds after the overnight's challenge fouled when a bearish ambush emerged from 72 cents. From the bearish ambush, the market has now posted an outside range day candlestick. This also needs to be confirmed, but a move under the low of 71.20 should be enough, or maybe 71.15 is a better level to see a confirmation for a move down to the region of 70.60. The rejection, any advances towards 71.85.95 again should be repeated, and I do expect to see further failed attempts. This is now the second outside range day and also the third rejection from the 72 cent mark, which gives further encouragement to the fact is that these technicals should eventually shape up to a more significant bearish scenario and not down to 70.60 but maybe to 69.5 as a broader objective. Looking at the euro pattern, well, it's a little bit mixed overnight, and as you can see from the challenge recently of the break above 113.70 is that the market has not progressed further. Also, do note the market did have one brief look at 114, the figure overnight, but the bears were also prepared and ambushed the market. But from a technical point, we're not quite broken down yet. So still, let's not discount 114.45.65 as I still believe is exposed. The dollar index is now flirting with the 96 handle and would need to continue today. As long as we maintain above 95.40, then the view is that the dollar index should progress further to the upside, and this in terms gives us opportunity to short the market above 114 and look back towards the region of 112.50. To some of us, the surprise rally or rebound from 110.35 in dollar yen has now briefly looked back at 111. I still feel this gives us opportunity to short the market with a resistance at 111.20 and firm at 111.60. I do expect to see a re-challenge of this support at 110.35, with the objective remaining at 109.70. Well, the pound rallied back to fresh highs and also note posted 133.49, which was a 7-month high. The other factor is that the market has rejected this level, but it's still holding. With the uncertainty due to Brexit and also the UK Parliament to vote on Brexit amendments, does give somewhat a mixed view here. I wouldn't shorten the market as of yet. We don't have the technical confirmation, but we are overbought. It is assessed that we could be looking up towards 134. This is quite a significant level. As you can see here, it was the previous rejection back here in October 2017, and it was the start to the downtrend in 2018. So we could see a rejection roughly around that 134.90 to 135. Gold took a tumble overnight, however recovered somewhat in front of that up channel at 1,312. It is assessed that the range today is 16.25 and should see further demand to the upside and look back towards 31 to 37. As long as we maintain above 12, the bullish view is intact, and these pullbacks are an opportunity to buy. Riding up with oil, well, after losing 3%, the market surged over 2% last night. The latest weekly US data showed a slump in domestic crude inventories that validated OPEC's production cuts. The US Energy Information Administration reported that crude oil inventories fell by 8.65 million barrels in the week of February, compared to the forecast for a build of 2.84 million. It was the first US crude stockpile drop in 6 weeks, coming after relentless production cuts by OPEC. In the previous week, crude barrels have now risen by around 3.7 million. From a technical perspective, I believe the market's still looking towards $58 and could progress further up towards 61, or the measured move which is seen at $64, given from this inverse head and shoulders. As long as we maintain above this level of $14.95, I'm quite happy to hold my bullish view. Do note though, underneath here, the next support is not seen until $51 a barrel, but still at this case, we are pretty much on safe grounds, as the fact is that I do expect to see further bullish momentum coming from oil. Well, that wraps up for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the rest of the day that's ahead.